Today, we're talking about, and I love the fact that they're able to put a press release saying remarkable in the headlines, especially when talking about a junior mining discovery. Pretty incredible coming out of the Gold Digger property.
They see a lot of visible gold here, and that's not really a big surprise, because if you look, way back to the first season I think they drilled was 2021, and they did metallurgical work shortly after that because they did see a lot of visible gold in holes. They took my advice. They did a round of metallurgy, I think, in late 21 and early 22, and then they did another one in late 22 and early 23. And both rounds of testing just hands down demonstrated absolutely fantastic recoveries. The metallurgical results to date speak volumes about the very high quality.
You'll remember Dr. Quinton Henning was on a few weeks back, and we see great movement from both of those companies being received exceptionally well. We've been working with Goliath and own shares of Goliath for years and years. We believe in this story. We believe in the syndicate and the entire team that they've amassed. The big news, not only from back at the conferences, was the drill results, which were incredible, and we're waiting on a ton more. It was yesterday's announcement from McEwen Mining that they are coming in for, I think, 3%. So 10 million. And that is significant because, once again, you start attracting the likes of the Dr. Quinton Henning, Rob McEwen, all these kinds of names into your deal. People take that as a sign because you're attracting savvy mining investors that have done very well in the past. Certainly is information on our Substack. And I mean, there's a myriad of interviews that you can go through over the years where we've expressed our excitement as to what they were developing and they continue to develop. Part of what we do is we let people know companies that we love and we like. It's how we've done really well in the past. It's in part, we got to work with Great Bear years ago. We had great success with that. We have a framework, like a model that we use, and we have a network that we use. And that's a lot of the hard work and heavy lifting, is being able to rely on a lot of smart people and their expertise. That goes a long way. And we make sure for our subscribers that we're doing that. We're identifying risk. We're explaining the asymmetric possibility, really putting timeframes into perspective. Once you get some of these big players getting involved, as you would have saw with Great Bear, is people coming into the deal at different sections, adding more, I hate to use sort of credibility, but certainly adding a lot more flavor whenever you're getting further acknowledgement from mining billionaires and major investors saying, yes, we're acknowledging that you have something here. We want to let people know about that. Usually we keep that just for our subscribers, exactly who and how much we're buying. But we've been pretty vocal about those two. Happy Valentine's Day, everybody. So a very happy Friday out here in Vancouver. We're, lots of gold talk out there. Sometimes I feel like you can run out of things to talk about in gold, but because it's so embedded now that people are understanding that it's part of the financial system, whether you think it's boring or not, it simply is. And it isn't just gold bugs that are reflecting on it and that are focused in on it. And part of my mission is to let retail, mom and pa know, like it's out there. It's something one should be focused on. It's conservative. I mean, that's the thing. I mean, you can kind of compare it to your near cash position that you could be holding. And certainly, I don't think anybody wants to be holding Canadian dollar right now. But in any event, gold looks great. And we want to chat a little bit about M&A for 2025. There's been some already and some discussions and some possible hints at things that were coming down the line. But we're coming into PDAC, and that usually is a great meeting place for people to be meeting in the side rooms, talking about deals, talking about what's out there, and putting deals together. So this is the time. And not only that, a lot of these producers are coming out with their numbers the next week, basically over the next 5 days, sort of thing. So that people will be paying very close eye to, because if you're talking about M&A, there's lots of metrics and there's lots of things to consider. But let's just say, here's 5. So one, if you're a producer, what's your mineral reserve and what's your resource? What do you have currently? And then are you looking to aggressively grow? So you look at your targets mineral resource and what they've got and inferred, and if there's any growth potential there. You look at the cost structure and profitability of the company, the acquiring target. Is it a blown out structure in the stock, or is there something that you can grow? And a lot of that comes down to not only all-in sustaining costs, how are they running their operations, where are their operations? You need to see, is management not doing a good job running the assets, and that another team could come in and make it more profitable, or is it that they're running it too well and it makes it a very attractive target? These are all considerations. Of course, commodity price and market conditions are a very big indicator, probably the most important, especially nowadays. Gold is doing exceptionally well. We anticipate it will be for the near-term future, and that means tons of free cash flow for any of these producers. And it should mean a lot, and we're going to find out Q1 here very soon as well. Geopolitical risk, regulatory risks, all of these types of factors, I would say, is absolutely critical. And even though some might argue that it isn't as big a deal, and I can get it, I understand it's a controversial topic. We can point to Mali and the issues that Barrick's having there as a very near-term example of what can happen when you're in some of these countries. Never mind the fact that we see lots of onerous regulation in quote unquote the West. Despite the claim that they want to get these resources out, a lot of them have kind of tied themselves to political ideology that makes it very difficult to do any business. So what might need to happen there is a new, fresh way of considering approaches, doing away with some of the extreme leftist rhetoric and ideology, and focus more on solutions. So then, of course, very important too is synergy and fit. Some companies are extremely conservative, some are extremely aggressive, and those teams may not fit well together. The overall strategies may not be cohesive, and that can kill a deal as well. So there's lots of different aspects that one can kind of wander around in when considering it, and those are all very challenging. Once again, arguably, we've got the commodity and price situation covered, not a big issue. Mineral resources and resources is always challenging because you've got a feasibility study, you've got an economic assessment on a lot of these projects, and you see, okay, this is what we've got, this is what we want. But that's rarely the case. A lot of times, one might argue those are very conservative. There's a lot more there. So sometimes someone might be paying for something, and the team buying might think, you know what? We've looked at your data. We think that there is so much opportunity to grow at depth or width or whatever the case may be. We're willing to pay. We're willing to pay today for that. And today, I would argue, is such an interesting time period because of the strong cash flow. And yes, people are disappointed with some of the bigger companies out there, like the Newmonts, the Barrick, because they're all on sustaining costs are a bit higher. There's inflation. There's inflation everywhere, and I'm not making excuses for anyone, but I know that some of the bigger ones, they get picked on or certainly highlighted because they don't take advantage of this incredible commodity cash flow we're having right now. And we're going to know for Q1 here very quickly, and all eyes are peeled on the majors. But just to give a bit of an example here, and we did this as well. Whenever because sometimes it's fun to throw into ChatGPT or one of these to say, hey, what do you think 2025 will be for M&A, and see what it spits out. Now, once again, I'll just put the preface of whenever you're using any kind of machine learning, large language model, it only is as good as the data you're feeding it or the data it's accessing, which means the questions you ask and how specifically you ask them is vital and crucial. Also, you're not going to get access to things like, say, RBC's report on miners or, any private hedge fund or anything. Anyone who hasn't put it out in public, it won't have access to. So people that use these models sometimes will buy data or will, if they could get access to data from other analysts and all that, they would feed it into a system, a large language model that would then spit out their own data for them. So once again, you have to have both things. You've got this great big black box, which is the machine learning that's going to analyze things faster than anything ever imagined. But it matters what kind of data that you're getting, and you have to be very specific with it. If you're vague, it will miss a ton of stuff, and often you have to remind it. Like it might even give you the wrong name of the company. So it's a great tool, and I always like to kind of put that out there. Is that when people talk about the future of AI and the concerns, this, that, and everywhere else, to me, it still matters who is operating what version, like who owns that version, because that's going to have a bias. I know that say that they don't, but they absolutely do. You can even ask whatever model you're using where it sources its data from, and it'll tell you its bias. You have to force it to look somewhere else, and even still, they aren't the ones that are out to the public aren't teachable. You can't train it for your own use. You have to create your own version. So anyone out there who's a data freak would know this already. They would be building their own language model, teaching it off to the side, and then applying it to the data they want. And that's what you're seeing out there. But let's take a look at, say, Agnico Eagles free cash flow, $2.143 billion for full year 2024. 2.143, pretty astonishing. That's a huge number. Dundee Precious Metals, $305 million. Kinross, $414 in Q3 2024. We're waiting to see end of year on that one. Newmont, end of Q3, $763 million, likely over $1 billion. Barrick, $1.32 billion. This is free cash flow. So this is excellent. We know Barrick's doing a share buyback, which is helping to support the stock. We've kind of talked about them a lot with issues in Mali, and I'll just throw this out there because why not? This is as good as timing as any. Is that ChatGPT said, hey, maybe Allied Gold is a takeout target for someone. So you go look at Allied Gold and you go, oh, okay, the stock hasn't really done much. Well, where are they operating? Oh, okay, so West Africa, Ivory Coast, and Mali. Oh, okay. So that's somewhat interesting. If Barrick makes any headway with Mali, then maybe there's an opportunity there. Maybe someone says, yeah, I'm interested. Right now, I think it would be, I have zero interest in investing in any company that's in that area right now because of what's happening. But, it would take the likes of a Barrick or a Newmont or a Agnico to be able to negotiate at that high a level with that type of government and structure to have any hope. So it'll be interesting to see what develops, because certainly Allied by themselves, I don't think they would have any footing. No offense, I don't know anyone over there either. But if they're able to bully Barrick around, they're going to have no problem bullying any smaller mid-tier, low-tier, smaller tier producer. So we'll see what develops there. But hey, maybe as a contrarian opinion, maybe that is. Maybe someone says, listen, we'll take your Mali project off you. We think we can deal with that government there, and we think we can come to terms that would be profitable, and they don't have to give up too much. There's an interesting perspective there, and that's what we're looking for. We're looking to analyze different stocks and look at these considerations, and that's a good indication of someone who's got strong cash flow, who's going to need to do something. I mean, Barrick's going to have to do something other than just buy stock back. So where else might they look? That's I'm sure they're in discussions already, but we'll see what they come out with over the next weeks and months with regard to what they're looking at. And maybe that isn't just a full merger acquisition. Maybe it is to start heavily investing in projects in safer jurisdictions. And once again, that debate on safer jurisdictions, is a hot topic, because it's one thing to get permitting to be able to go poke some holes somewhere. It's another to try to go through an entire regulatory process over a decade with changing people, changing governments, and trying to get things done in an environment that's not so business friendly. So there's so many factors, and that's one of the downsides. And I mentioned the other day is tech can move so quickly and swiftly that one of their mottos is Like just do something and do it at scale and ask for like forgiveness later. Like just do it. Come sue me later, the back end. Like, I don't care. We can have that run. We'll be at scale then. We can fight that lawsuit for the next 10 years, but we'll be doing our business. That I don't think that can work in mining, because the amount of infrastructure, building, everything, it can be shut down at every single stop point. Whereas tech, build it, you can do it in secrecy. No one knows what you're doing. Boom, and you've implemented it. And you can have your own thoughts as to whether you think that's professional, ethical, anything moral, whatnot. But that I think you'd agree. If you look at a lot of tech, that's kind of their strategy. Build it, then ask for regulation later. And you certainly see that in the crypto market. But you can't see that in physical, real markets. And these other markets, as I say, can't exist without that physical, real market of mining. And sooner or later, the realization has to come that, and I think this pressure with tariffs and this is restructuring the conversation, good or bad, in people's minds of where do we get these goods? Where do we get these materials? Who are our trading partners? Who are our friends? And are we actually doing what we're saying? Are we actually holding governments responsible? Like, I mean, we could be saying, "Oh, we're a green country." Are we really? I mean, I would say that we're not. We do a lot of virtue signaling, but no, we don't actually implement, which would be mining, all the strategies required in order to fulfill the needs of the rest of the world to meet that demand for copper, for all sorts of materials. I would say that we've done a very poor job at that, and that there's lots of room to grow. So that's the upside. There's lots of room to grow if we have a business competent, monetary, fiscal competent government in there that says, "Hey, we want to get this done." And it works. I mean, imagine how difficult it is to run, say, Barrick or Newmont, and they have to deal with commodity prices and jurisdictions and this and that. Now think of what it takes to run a country. Like, I'm just taking a big step back here. If you've never run a small business, never mind had the chance to run the likes of a Barrick, a large multinational business, how on earth are you going to run a government? People have kind of stopped thinking about this, or they just say, "Oh, well, the bureaucrats will run it in the background." No, that's the worst thing you could possibly have, is incumbent bureaucrats running things. That is the antithesis of efficiency. So I think we need to refocus everything how we're doing things if we want to implement actual real change. And that's coming. And we see it in the States. It's being forced with like a hammer. And I see it as upsetting it is to some Canadians. I see it as being an excellent opportunity for merit and those who want to work hard and those that want to actually get these materials out of the ground so that we can build up all of our industry. I see it as being a very positive things. Let's talk about some other companies right now. Kinross, I mentioned Kinross. So yeah, so what should we be watching for the year ahead? If gold hits 3,000, that's a big benchmark. We think it's going to happen sooner or later. It's certainly, the charts look great. We're going to see continued cash flow, hopefully better, all-in costs decreasing. And we're going to know soon enough who's on the hunt for what. If you look at, say, a Kinross, they've got operations in the Americas, West Africa, Russia. Of course, they've got Great Bear. So, is someone going to look at them and think, wait a second, maybe there's someone to go after to maybe merge with? Maybe. They're on a very big growth pattern. It looks exciting. Someone like New Gold, operating in Canada and Mexico. They've got Rainy River, New Afton mines. Those could be, interesting. One of the ones that ChatGPT threw out there immediately was, hey, maybe a Cisco's Windfall project in Quebec. Maybe that's something someone wants to look at, either buy, merge, or whatnot. So there's a couple ones that it's kicked out that are interesting, that are worth going into a bit more detail about. I Am Gold is another one, depending on the projects that you're looking at. And of course, the one that did pop up quite a bit was Anglo American. So the company is betting on copper and battery metals as well. but they've kind of diversified a little bit more. They got rid of their De Beers, their diamonds. They've restructured a bit. So they've got a strong balance sheet and a bit of an edge with some stability in their cash flow. And they do have some analysts feel like undervalued assets, and that they might be looking to acquire. So then also on the flip side is, could Anglo be a target itself? So could a BHP or a Rio Tinto, would they be interested? Maybe these global giants, they want Anglo's copper and iron ore assets as they seek to consolidate some of the industry. Maybe Glencore looks at their PGM and copper portfolio and says, oh, we're interested in that. So there's lots of targets out there. There's lots of interesting things brewing. We're going to see a lot. I believe that's the RBC show on the 4th down in Miami. They've got their gold show down there. And of course, PDAC is in March, which will be very exciting. There'll be lots of news coming out from that. And it's looking fantastic for gold. All these tariffs, all of these pressures, I see them as a wake up to Western countries to be business friendly. And I've watched a couple of interesting takes. JD Vance was on in Europe in France at an AI conference, and he spelled it out very clearly what their mandate is regarding AI. It's very similar to the tech what I was saying before, is we want to build with partners. If you don't want to be our partner, then you're not going to be our friend. So that's very clear. We're getting that message right now as well. And I think that's the message coming out of the US. And the response to some people is, well, maybe we should find better trading partners. Well, yeah, I think Canada had lots of opportunity. I mean, we should be trading within ourselves, for one. We also had a great opportunity for oil and gas to do a deal with Germany that we turned down. Well, I shouldn't say we. Our government turned down. That would have been exceptional. I mean, as we know, Germany was back to coal. We could have fed them natural gas, but nope. They decided to get a deal with Saudi Arabia instead. And that's on us. And those that are now supporting Justin out there because he's playing a little bit tough, I don't understand. I mean, it just shows how marketing works. In any event, what we hope to see is not only with producers running things as well as you can under inflationary environments to maximize profit, to do what's right for shareholders. You need to see that in government as well. And I know people say, oh, but there's all sorts of shareholders. There are, but there's a whole. There's a majority, and the majority is what should be focused on. And also those that want to work. Those that are excellent at working should be held higher and should be given opportunity. It shouldn't be that, the equality of outcome that we've been hearing so much about, that regardless of how great you are at something, everyone is equal. And we know that's not true. I mean, it's fundamentally, factually, naturally not true. We're all not equal. We're all different. We're all better at some things than others. We should be finding what we're really good at. And if you're really good at mining and you're really good at extracting gold, then you should be praised for it. And that team should be looking for other assets that they can apply their techniques, their technology, and their strengths to provide maximum shareholder value and get it out of the ground safely and more efficiently. And we're going to see that. And as more gets revealed of different cost structures and all-in sustaining costs, we're going to see companies looking for projects where they feel that they can add a lot of value, where maybe their expertise maybe gets a lot more ounces out of the ground, or that they see projects that, I mean, you could look at Goliath. They say, listen, they're hitting incredible assay results. They're growing and they're expanding at depth and width. Maybe we need to stop them before they find too much more. And that's what happens. They take out targets that they think are going to be exceptional. And I was pointed out to by someone that, Andrew, they're 95% of gold in the ground out there isn't over 1 million ounces. Now, take that as a grain of salt. I'd love someone to check me on that and say whether that's true or not. But that took me back. I thought 1 million ounces to me is decent, but nothing that would be, anyone going, oh my God, like, I'm really, really excited. Maybe we're getting spoiled with some of these giant projects that are happening. But that really highlights then that some of these companies that have 5 million, 8 million, and growing, that those are truly exciting and undervalued and underappreciated. And there are companies out there, and there's lots of people, whether it's Dr. Quinton Henning, whether it's Rick Rule, they talk about, or Eric Sprott is out. He talks, I think every month, he mentions companies that they just love that hit both that scale, great assay results and big. So let's see what happens. It's going to be exciting. The next couple of weeks, more will be revealed. And I don't think anyone would argue that gold doesn't look exceptional moving forward, because once again, we're just getting started to getting solutions. Hopefully those solutions will come to Canada sooner than later. It's tough, the situation in which we're put in, but I believe that there's a big opportunity. And even in this stress, and even under the duress of tariffs and whatnot, people are starting to ask the questions as to, wait, do we have a trade deficit? Are we actually mining this stuff? Where are we getting this stuff from? Who are our trading partners? These are questions that are often boring to people, but they have to all be readdressed and then decide, well, who is our partner moving forward? Obviously, without a doubt, the U.S. should be our trading partner, and we should have a strong thing that works well for Canada, not just gives away anything to the U.S. But that's my hope, and I think that absolutely can be done. And once again, you're dealing with a president down south that is a businessman. He's going to negotiate. He's going to negotiate hard. And people in politics aren't used to that. They're used to to some degree, depending who it is, diplomacy, very long time frames of discussions. There's no time frame because, they don't really care. The time frame isn't that big a deal. This is the hammer effect of, no, we're making change. It's happening now. Come sue me later. And once again, I'd love to hear your feedback as to, you think that's good, bad, and different. I think it's good because it's waking people up to realize what we've got here in Canada, be proud of it, stop feeling like, oh, we need to feel terrible about something from the past. No, we're sitting on literally a gold mine in this country that we can utilize and we should utilize. And there's a huge opportunity. And as soon as the rest of the world sees that Canada's open to business and they see that we're pro-business and that we want to get these critical metals out of the ground, then we're going to see a massive flow of momentum and of cash, and that's going to accelerate things in this space. All right, everyone, happy Valentine's Day. I hope you have a very special day with your big loved one, and we'll talk to you soon. Have a great weekend.
We drilled it expecting to get more, 1.5% nickel type thing, which would be fine, which would be great. you get a lot of happy people finding a 1.5% nickel. Nonetheless, what we found was something quite completely different. We found our discovery hole was almost 8 meters of what was about 1 ounce PGMs, 1.5% copper, and it was 60 meters from surface. So it was quite a surprise, and obviously a happy surprise. We hit some amazing holes, really, each one sort of better than the next. We had, I don't know, at least, 5 or 6 holes of 10 meters of 10% copper equivalent or better, some over 20%. Unheard of holes, really, anywhere in the world, in the history of the world. So that's how good it was. And, so that, made us really sort of rethink what we had here.